Globally, we watch as the markets are falling apart as the policies of these governments fail. You came here for the truth, so let me unveil that for you. I'm going to try to do a quick video today and connect a few dots. This is out of the New York Times, and this article is talking about Saudi Arabia, Syria, and Russia, as well as others. And basically, I had done a video recently about the possibility of why oil is falling. And you may have seen that it's the trailer on my channel page. And this article here, among other things, I recommend reading it. It talks about this. Syria was a major topic for the Saudi delegation that went to Moscow in November. And he said that there was steady dialogue between the two countries over the past several months. It's been unclear what the effect of the death of the king might have on these discussions, which the Saudis have conducted in secret. And it is talking about how Russia is one of the partners with Syria. In fact, perhaps one of the biggest partners with Syria, and how this is all affecting them. So they're believing here that perhaps this is all to put a stranglehold around Syria, and they want to split apart Russia and Syria. They do not want them to be partners, and they are really trying to put the tension in between them. So this is very interesting information. I don't have time to get into it today, but it is definitely a good read. This right here, the OPEC leader, he said he's not saying that OPEC will come in and rescue the oil market by reversing its previous decision to hold steady on production. Instead, he sees the signs that the oil market is self-correcting as oil companies have made deep cuts to spending, which will eventually lead to lower production growth. Now, of course, if the market was true, if it was real, that would be accurate. But we know that there are other forces at work here. See, he sees oil could go back to $200 a barrel, according to him. But I feel that the reason that it went down so significantly had nothing to do with the actual supply and demand fundamentals. If we look at that, perhaps it would have gone down. Perhaps it would have dropped from a very high point, over $100 a barrel. Perhaps it's $80 a barrel, $90 a barrel, but did it have to go down to the region it did? Well, that is left up to you to decide. And look at the effects of this. We have Calgary, a big producer of oil in Canada, and it's Calgary housing market under pressure. Remember, it's not just oil prices that are affected, and this goes with any commodity. If your country or the town you're from exports a lot of a particular commodity, if there should be a problem with that commodity in any way, you're going to have other factors, and this is one of them, the housing market. Total sales are down over the past year, and you have more people selling. In fact, a considerable amount of people selling, as well as the housing prices declining just slightly here for the average price. So this is something to watch over the next year and see what happens. And you look at the energy stocks that are actually in a bubble right now. According to this, they haven't been there back since 2000. Going back, this is the PE ratios, and you're looking at this and have to figure, how did it get so high so quickly? This is very interesting to note. This is the 200-day moving average. This is every stock trader's favorite indicator here, and you could see statistically that we are headed for a very big disaster, and in fact the market has already begun to fall. And that's using their statistics that they like to use, the 200-day moving average. I like to look at other more fundamentals, let's call them, or just generic statistics and indicators, but let's use the 200-day moving average, and that shows that we're headed for a decline. So now we have the statistics on our back, the indicators, and there's no reason why we should deny this anymore, that it is QE that was boosting the economy. And then we have the rating agencies, which are completely fraudulent to begin with. But however, let's look at this. Street Insider says the S&P takes ratings actions on several UK, German, Swiss, and Austrian banks. And these are the big banks too. Standard & Poor's rating services today that they took action on these and basically following a review of government support. They are downgrading these banks simply because they're worried about the euro-viral contagion that I spoke of in my book, that I've been talking about ever since. And what is the solution to all of this? That's right. You need to act. You need to take action, executive actions. You need to get the central banks in charge. And look at what happens. Look what they did. RBA cuts the interest rates to a record low of 2.25%. That's right. Whenever you have a problem, you just print money. And if you're already printing money, you can always lower the interest rates even more. Look at what happened in Denmark. Negative rates on housing prices now are coming. So this is what you need to understand, that they only have two bullets in their gun. One is interest rates, one is money printing, and the interest rates are definitely favorable politically. And so here they are going to a record low of 2.25%. What does this tell you about the strength of the global economy? You have Australia, which is the big exporter to Asia, and even they are struggling right now. So you can't use this excuse that it's just a particular country that is hurting. In my book, I was talking about the housing prices, which connects into what I was speaking of earlier. Housing in the US and other countries collapsed after a major boom, leaving millions of empty homes to be purchased. The boom was fueled by continuously low interest rates and government policies that allow virtually everyone to own a home, even when they couldn't actually afford the mortgage. Now think about that for a second. If interest rates rise beyond their historic lows, even more people will be forced to become renters. So instead of increasing the interest rates, knowing what is going to happen, but that is what is needed, instead, they will continue to bring the interest rates down. And this is going to show you how bad the situation is. The White House deficit will increase, or I should say, White House deficit will increase 20% this year, and that's despite record tax revenue. The more taxes they bring in, they will just continue to go deeper into debt. It is impossible to fix the solution when their solution is simply to create more debt. That is the system itself. It is built upon debt. It is structured upon debt, and nothing is going to change that. No matter how much money they bring in, they could tax people at a 100% tax rate, every single individual, and they would still not have enough money to pay off their debts every year. That's how bad things have gotten. And you look at the unfunded liabilities like Social Security, Medicare, and so on, and you have a situation that is literally now mathematically impossible to pay back. So when we have people that suggest otherwise, have you even looked at the statistics? Have you even tried to see the reality? But, of course, the answer is no. They just want to listen to the emperor, and that's great because Emperor Obama, Lord and Savior, will be there to save everything. He'll just write another executive action, another memorandum, and he'll save the day. Underneath his suit, he has the Superman outfit on because that's who he is. He is Superman. He's here to save the day. And this right here, European central banks resists latest Greek bailout plan. Of course, they're going to go back and forth until that very last moment, until there's a struggle there out of CNBC, but the information is out of the Financial Times. The European Central Bank resisted a key element of the Greek government's new rescue plan, and it's potentially leaving Athens with no source of funding when the international bailout expires at the end of the month. I think partially this is what they're going for. They want a little bit of a struggle, and they want a reason to basically cut certain parts of their government, cut off the limbs that are dying, and this may be what they'll have to do. They're going to struggle here, and that's obvious, at least in the short term. Should they choose to do this, I don't know exactly where they're going with this with the new government, but it will be very interesting to see how it all plays out. So the reason I mention this here is that you have government policies that are failing. Look how they failed Greece, going from 110% GDP to 170% GDP, and all because why? The policy was to increase the debt, and they did exactly that. So in a way, I guess they were successful. I guess the IMF's plan to put them further into debt was in fact successful. If you found this video informative, I'd appreciate a thumbs up. I also hope that you liked the last video I did about derivatives. I'm planning on doing a whole series of videos, very simple. I don't want to alienate any of the subscribers out here. I'll keep things also talking about the news and everything, but I'd like to include some videos about the basic topics that a lot of individuals, they're not 100% sure on, and there are new people joining up every day. They're just waking up for the first time. They want to know about this kind of information. So I will definitely continue to bring out the basics as well. So I hope that you'll hang in there with me, and we go on, and we will basically get into the deeper intelligence. I will have much more to share with you. Don't forget to become an insider. The Insiders is where I give out all my best intel for free, and that is available at themoneygps.com. You just scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.